All right, good morning. Hopefully, everybody's having a fantastic week. Today is Thursday, June the 4th, and Bitcoin has puked pretty much all of its April gains. Well, not pretty much all of its April gains. As you can see up at the top of my monitor, there is April's low. So you have given back all of April's range. So, what happened? What's going on? Well, on May the 5th, Michael Saylor said that he would sell some Bitcoin to inoculate the market, kind of just to prove to the ratings agencies that he could sell in a bear market and would be fine, as he is trying to get his preferreds, or at least MSTR, back on or in the S&P 500, as he would benefit from those exchange flows. But nonetheless, that's essentially when Bitcoin topped out. There was a 200-day exponential moving average up there. It is typically looked at as resistance on the first test. We knew that would be resistance. We briefly spoke about it. Once the funding rate switched back to where the bears would be getting paid to hold shorts, we kind of felt like it was just a matter of time before Bitcoin ultimately did pull back. In the middle of last week, Bitcoin retested the April's midpoint. I did say specifically in a live stream that I did not think that that level would be enough to hold as support, as it just makes sense, right? If you get paid to hold shorts, you're going to hold shorts, especially at an opportunistic area to put those shorts on. And since Bitcoin literally has not shown any signs of strength whatsoever, in hindsight, maybe not this time, but next time, you will be prepared for that. All right. So with all that being said, welcome to the channel. Hopefully you guys are having a fantastic week. Hopefully you're not getting too badly beat up here. And for those that are looking to participate in future Bitcoin bull market rallies, you are in value once again. So this is a place to be adding to those cold storage wallets. At $63,000, I'm not going to go as far as say it's cheap Bitcoin, but all-time highs is 120. So you're about half off or close to half off. It's typically a decent time to put risk on an average, on an asset that averages up, right? As long as the last 10 years shows consistent uptrend ability, then you can add to assets like that. So we'll see what happens with Bitcoin. Obviously, nobody knows the future. You've got a lot of people screaming about $20,000 targets. Bitcoin's going much, much lower and all that. We're going to go over a lot of things in today's live stream to kind of see where we may be looking for a potential bounce. I have already scalped out a little bit of returns here this morning, as if you're going to try to buy Bitcoin when volatility is expanding, I highly recommend that nobody ever does do that. But if you're good at mitigating risk, and if you're quick to take profits, there are dead cat bounce plays that one could look for in a scenario like this. But I mean, if you just go back, this has been a brutal market the last few days to try to even pull off dead cat bounce trades. But clearly, when you liquidated April's low, had you put on a long right there, took profits at the previous 4-hour swing high, just when I say take profits, I literally mean close the whole position. There's no reason to look for upside continuation when the market is clearly trending lower. Then obviously there was an opportunity there for a long, and another opportunity this morning for a long at a higher low. And it gave you plenty of time to show that the potential for the low was holding. It was quite a bit of time. So generally, that's a pretty decent signal that there is a near-term support building in. Now, would I anticipate this near-term support holds and Bitcoin climbs back up to all-time highs from here? Obviously, the answer to that is no. No, not even in the slightest. Their next downside target is February's low. And it would be hard-pressed to try to get anybody in the market right now to believe Bitcoin is not going to go down there and get that low. I mean, does it have to? No. No, it does not. So we need to talk about the elephant in the room. And right now, that elephant is the dollar. And even though the dollar was choppy, not yesterday, but the day before yesterday, that just means it was an inside day range. Bitcoin still had a massive down day that day. So that day, dollar weakness did absolutely nothing to stop Bitcoin's downtrend. So I'm not saying that you're going to see a perfect 100% inverse correlation to the dollar with Bitcoin every single day. All I'm saying is that there is a macro move that is potentially coming on the dollar, and that is what we need, I think, for a Bitcoin bullish catalyst. We at least need dollar weakness. You, at the bare minimum, because Bitcoin is traded against the dollar as a currency pair, and because of that, Bitcoin must be stronger than the US dollar to advance. So with that being said, let's go take a look at the dollar real quick, as something massive has happened here. Now, we were positioned long for the dollar, even though we don't want to be bullish the dollar. Price action or price is king for us. So we always trade price and not our bias. So when we realized that the dollar was not going to break down last week, we started looking for long trades. We got short euro dollar on Tuesday. Yesterday, you had a breakout above daily res. You already filled this gap over here last week and then rotated back down. Made it almost appear as if though the DXY was going to head lower, but then clearly bounced at support, the 50-day exponential moving average. It's also the 21-week exponential moving average. A big support there. If I go into the weekly, you can see last week you traded right down to the 21 and pulled back off of the average. That was kind of, we'll see what happens. I had a short side bias on the dollar if the dollar failed here. The dollar did not fail there. So that's when I decided to get long and participate in the Wednesday rollover rate. So yesterday, every week in Forex, on Wednesday, most exchanges will charge triple the 24-hour rollover fees. So essentially that just means that Wednesday, if you're seeking alpha for rollover rates, Wednesday is the day to be positioned. So I shorted on Tuesday, made the rollover rate Tuesday, then made the rollover rate on Wednesday. Now today, on Thursday, we're seeing what? We're seeing a rejection on the dollar. Why? Well, we liquidated last week's high. So there's reason number one. Generally speaking, if anybody is going to be looking to put on short side risk on dollar, that's where they're going to look to do it. I mean, that's how we do it, right? So that's point number one for the pullback here. Point number two is rollover rates are back to being just single day. Now, with that being said, the rollover rates on short dollar trades are still very expensive. So basically what that means to the lay person is big money, big money, like billion-dollar money firms will not put on a short dollar trade because it's expensive to hold it. Right now, the dollar is not trending. It is a very choppy market. It has been for a year. So to put on a big position, you're going to want to have extreme confidence that it's going to go lower because you're going to pay a premium to just hold the trade. Therefore, making it very unlikely that we're going to see any serious downside move on the dollar. All right. So we are pulling back today, and we have already taken out yesterday's low, which doesn't bode well. However, if that holds, I would anticipate the dollar goes higher for the rest of this week and going into next week, going into the Fed meeting. If the dollar dumps from here, that could indicate that now that we're close enough to the Fed, big money is rotating into dollar shorts. The only reason I could see them doing that right now with the current rates is if they felt like rate cuts are coming. That's the only thing that I can see as a trader myself, as someone who does this for a living. That is literally the only thing that I can see a reason to short the dollar would be here, is if rate cuts were coming. So even though we're seeing a pullback today, I'm not going to take it as a sign that rate cuts might be coming. But if we see any serious move lower on the dollar, then we could be seeing something like that. I think that's what Bitcoin would need. Now, with all that said, that's not being priced into the market right now. It is very important that you understand that the market is absolutely not pricing in, where is it? Right here. Rate cuts. So when the VIX is expanded or high, when it's above 15, back in the day before Trump was ever elected into the White House, anything over 15 on the VIX was considered high or elevated. And whenever you have an elevated volatility index, that just means that market participants don't have a good idea as to current market direction going out in time. So generally, whenever the VIX is above 15, that means there's a lot of people pricing in risk, but only pricing it in out to like 30 days. So as the VIX climbs, the probabilities for further out in time predictions become a lot less likely. So we do have an elevated VIX right now. So for me to go out to December, right, that's still 6 months away to look for rate cuts. This could change. All right, this is likely going to change. But as you can see, our target rate is 350, 375, and they're saying there's no chance, right? That, or there's more of a chance that they're not going to do anything. Now, last week, the rate cut probability was completely non-existent, and rate hikes probabilities were actually higher than staying at the target rate. So basically, the market is currently, it's going to price this stuff in as each month progresses. We do have a Fed meeting this month, and it will be Kevin Warsh's first meeting. As of right now, they are not pricing in a rate cut, and it's a strong probability that Kevin Warsh does nothing. So for that reason, I have to stay long dollar for now, because I get paid to do so, right? Even if the dollar does not break out, even if the dollar chops sideways, I will get paid to hold dollar longs. So you can see why it's very difficult for the dollar to go lower when that is the case. Because I'm not $1 billion portfolio manager. I am a portfolio manager. I manage my own funds, but I am a small fish in the sea, right? So my little positioning and my little thinking isn't going to move this market. But if everybody is thinking the same thing that I'm thinking, kind of makes it hard to look for dollar shorts right now. So with that being said, it makes it very difficult to look for Bitcoin longs. Does that make sense? And also funding rates and yada yada. Now, something else that's happened here yesterday, that a main reason why we're seeing a pullback here on the DXY is because USD JPY hit 160 again. 160 is a price that we know for a fact that the BOJ has intervened in the past. We know that they have intervened there multiple times in the past. So the fact that we're pulling back today could indicate this is still like this. I do not know why. I don't know where my time frame went here. But let me pull up USDJPY. I don't know what button I need to hit to make this go away. Here, let's just do this. Let's do a new tab and we'll pull up main. I'll just pull up random chart here. Bam. Bam. We'll go into USDJPY here. Forex.com. Bear with me, bear with me, bear with me. I know I should have had all this set up before I went live. And then we can delete this tab. Boom. Close without saving. And then we can move this tab right over there. There we go. See? Quick, simple fix. So yeah, we hit 160 yesterday. And now this thing is pulling back. So I'm not saying that the BOJ intervened again. I'm just saying we know that they have intervened here in the past, and we are seeing a negative price response at 160. Now, the BOJ is going to have a meeting the day before the Fed does. And right now, probabilities on BOJ is that they hike. They're only supposed to hike 25 basis points. So it's going to go from positive 0.75 up to 1.00 on their target interest rate. That could cause some sell side pressure, but the spread is still so wide that 1 basis point move higher or whatever, that one little hike isn't going to be enough to bring in heavy sell side pressure. But with what the BOJ has already done in terms of intervention, coupled up with big people taking profits potentially because of rate hike, if the US Fed also cuts one time, right, that would be another move towards tightening that spread. So then you would start to see more and more investors willing to short the dollar. So right now it's not being priced into the market. So trying to short USDJPY for scalps only is, like, if I was even looking for shorts on this, that's how I would do it, right? Only for scalps. That means quick in, quick out. No long-term holds. Because if this thing chops sideways, even if you don't get stopped out of that short trade, you're going to end up losing more money from rollover fees as it chops sideways. Good cold water. Delicious. All right. Sorry about that. But yeah, so we kind of have this weird scenario where it doesn't even matter where you look for that dollar short trade. It is super expensive. It's expensive to hold longs on euro dollar. It's expensive to hold longs on pound dollar. It's very expensive to hold shorts on any USD pairs. So anything that makes you short the dollar, it's expensive. It's super expensive. The only one that's actually paying you to be short the dollar is this one. And I can't imagine anybody would be looking at this chart and thinking to themselves, damn, this is a short. I mean, this thing doesn't ever close down on the week. When it does, it's like every 600 weeks you get a down week. So now, with that being said, there might be a synthetic trade that we can put on this, but we'll discuss that a little bit later. So what are we looking for today? All right, shut up. You got the macro done, and right now things look bleak for Bitcoin. USDJPY is currently setting up for a potential short right here. So very easy to mitigate risk here. You've got a daily supply level right here. However, with that being said, this is not a supply candle yet. because this candle must close under this candle's low for this to be a legitimate supply zone. So you don't have that yet, but if the BOJ did intervene, and if today is going to be a large down day on USD/JPY, then perhaps the trade is setting up now. Perhaps it isn't, though. Perhaps they did not intervene, and nobody is shorting USD/JPY today. So it's up to you to make that decision. But right here at this prior 4-hour swing high, that's where you're going to mitigate risk. If price is trading above that white line, then you do not put on the short. As long as it is trading under that white line, you can hold a short. And that's how you mitigate risk. All right? Nobody knows what price is going to do. So with that being said, sorry, something's weird going on over on my other monitor, kind of. For some reason. All right, so yeah. Elder modified. Okay, so what is going on here? Give me 1 second, because for some reason I'm having an issue getting positions. Like, I can't close a position. I'm trying to close a position and it literally will not close it. Okay, it's saying the position is closed, but okay, so what do I do? Refresh. Oh my goodness, give me a second. I'm sorry. Obviously, it's very important that this position do close. Okay. So, yeah, right now would be the time to put on shorts on USD/JPY if you were looking to do that, or in and around the New York Open at 9:30. If you get a wick above and then a failure, you'd be looking for shorts there. I don't see a trade on Bitcoin at this moment in time. All right. I mean, if it comes back down here and holds support, then maybe you could look for a long and target this swing high. And it would be a quick scalp. And that's exactly the trade I took this morning. I was watching this candle right here as it opened and pushed lower. I wanted to see if it was going to drop under this low. Once it failed to go lower and went back to the open, I just simply went long. And take profit was set just shy of this candle's high. Because Bitcoin is so volatile, as you can see, that gave me my 2% profit target, which is generally all I'm looking for. I'm not looking for Bitcoin to give me 18 4-hour candle up closes from here on out into time. But if you are going to be scalping or trying to scalp or trying to put on any kind of long trades on Bitcoin, that's what you have to do when volatility is this this much expanded. It's too volatile. And volatility means downside, not upside. Now, if volatility starts to fade, and it literally could, as you are into potential old support here, I mean, it would it's not really a supply zone because the next candle did not close under the lows of this candle. It's not really a supply, but it is an old area of support. So maybe once you lost it, maybe it now becomes resistance. I don't know. I mean, obviously volatility doesn't trade like that very often, or it never did through here. So, I mean, obviously nobody knows what's going to happen, but as long as volatility is expanding like this, it's going to make upside trades on Bitcoin very difficult. You're going to have to get in and get out quickly on those dead cat bounces. So it's essentially all you're doing. So if you're doing that, then you can take longs. If you're just looking to put a long on for a swing trade, like a 2-3 week hold, now's not the time for that. Now, if you've got a longer time frame, like a 5-year, 10-year hold, then now is the time for that, because you're into the value area. And value area in this sense is just the midpoint of the last 4 months worth of range bound price action. So essentially your range would be from the current year low up to, well, I would just use Feb's high as well. So like that, and then this right here, that's essentially value. So we'll know if it's no longer value once we break down and put in fresh lows. Then it continues. If it continues to go lower after that, then prices wanting to test lower to find sufficient demand. In that scenario, we would have to wait for another multi-week support to build to then suss out where is value. Okay? But as of right now, because those lows have not been breached, or because you are not seeing downside continuation beyond those lows, this would be considered value. If you're looking at a line chart, then it is not. You have broken down. So if I go look at this and kill these real quick, you have more than broken down below said value area. So this is a trending move to people that only view monthly line charts. Same can be said on the weekly time frame. As you can see right here is support. You have broken down. Now you haven't closed under there, but you have broken down. And then on the daily time frame, you have already swept that low as well. It doesn't look like it because it's a line chart. It's going wherever the day closes, where this will print. But there was a period in time today where you were more than far below this low. So on all higher time frame charts, daily, weekly, monthly, you have breached the bottom zones, if you will. So it does look like Bitcoin wants to continue lower. And I don't know many people out there that doesn't anticipate this low getting smoked. Not many. Not many at all. I mean, it's hard to look at this chart and say that 4-year cycle bros are wrong. You know what I mean? And that's why they're gloating right now. And I mean, it is what it is. They have every right to gloat. Bitcoin is getting beat up. You've got the BIP 110 thing that's happening out there. That actually, a miner actually filled a BIP 110 block. So there you go. And that's essentially what caused, in my opinion, that with Saylor selling. Because let's be clear, Saylor only sold like very little. You know what I mean? He has sold the amount of Bitcoin that he has sold compared to his overall position is like 0.0003%. It's a very, very small sell in relation to what he owns. He is definitely still a net buyer of Bitcoin. Just the fact that he owns so much Bitcoin, and he pretty much has been the guy to say, you can only buy, never sell, hodl, forever, right? For him to come out and be like, okay, I'm going to sell. It just makes people feel as if though he's in trouble or he's hurting or whatever. But that literally is not what he's doing. He is literally just trying to get, he's trying to just prove to the market that he can, first and foremost, sell. That it isn't going to be an issue, but it clearly is. So whether you want to blame it on Saylor, whether you want to blame it on the dollar, or whether you want to blame it on BIP 110, really doesn't matter. I can promise you one thing. If this continues to fail, and if price never goes back up to his cost basis, and in the next 2 to 4 years, he starts liquidating his Bitcoin portfolio, he will blame it on the BIP. He will blame it on BIP 110. I can almost guarantee you that, because he has said very little in terms of what he thinks about it, right? He's been asked, and he has steered clear from that. He did say one thing that kind of alluded to the BIP 110 people, like, you're dumb for trying to do this and blah, blah, blah. Like, he didn't say it in so simplistic terms, obviously, but he did mention it one time, but he didn't call out the BIP, and he just briefly spoke about it. But I promise you, if this asset ends up failing, which it's not going to, he would blame it on that, right? That would be a scapegoat, most likely. But yeah, he is, in a sense, a risk to Bitcoin now. And as long as Bitcoin is trading under his or their strategy's cost basis, they are a risk. In fact, they only make money if Bitcoin makes year-over-year returns of 2%. Now, that doesn't have to happen every single year. Bitcoin can be, down on a year for an entire year and slightly up the next year, but still down and blah, blah, blah. But year over year on an annualized basis, 10-year basis, he needs Bitcoin to creep up 2% per year, which isn't that much, because on average, Bitcoin does way better than that. Way better than that. It's like 20%. So he thinks he's going to be fine. I think he's going to be fine. I think Bitcoin does bounce eventually, and I think the bear market does end eventually. It's just a matter of when, all right? It's just a matter of when. So that's what we're kind of waiting on here. As far as intraday scalps, I mean, I wouldn't be looking for shorts today, not with Bitcoin being this freaking oversold. It's more oversold now than it was in February, or at least pretty damn close. Pretty damn close, right? So, I mean, it bounced back then. It could bounce again. So looking for shorts was Sunday. Sunday was the day to look for shorts. And before that, up here was when you should have been looking for shorts, when you were tagging the 200 exponential. So if you wanted to be short Bitcoin, those were the two times to put those trades on. Or here, I mean, there has been 3 opportunities for you to get short. If you haven't, I don't know what to tell you. I definitely wouldn't be looking for it here. Now that price is so deep into the range, you're going to see two-sided trade on an intraday basis. You're going to see big spikes up and big spikes down. It's going to be very difficult to mitigate risk in that scenario. It's possible. It's definitely possible to do it. I've already done it today once. Okay, so what? Then I would say USD JPY is the only thing that I know of. Yesterday I was looking for silver to roll over. I still like silver lower, but I need dollar strength for that thesis, because if we go look at silver on a long-term basis here on the weekly, there's a lot of freaking wicks down here, which indicates support, right? Now, the more time goes on, the more times you test support, the more chances are likely that it does eventually break, but it is still support. So clearly people are buying silver at 70, right? They like it at 70 or 72, and they're buying it at 70 or 72, and it's causing price to struggle to break down. So for it to break down, I think you're going to need dollar strength. Though now that dollar's pulling back today, that's putting a slight bid under silver today. But as long as silver stays under this, I want to short it. All right. So there is a potential short right here on silver right now. I don't know that it's going to work, so make sure you mitigate your risk. All right. Best entry, clearly going to be in that area. But I mean, here could be where you put that short on and then you use the high of day to mitigate that risk. The market just opened. So if silver is going to fail because of dollar strength, we would want to see it fail here. So let me pull silver up real quick so I can put that position on. As the trade I put on yesterday got stopped out this morning. All right. Okay, so how much cash do I got? That much. Okay, so let me go in with this much of a short. Okay, so yeah, basically that's that. So USD JPY shorts and then silver shorts. Clearly, one of them is going to get stopped out. All right, they're both not gonna, you're not gonna make money on USD JPY to the downside and silver to the downside. Because if we need dollar strength for silver to go down, then yeah, you see what I'm saying. But in terms of crypto, I don't have a setup for you. Everything's getting annihilated, and everything has been getting annihilated for some time. Now, we put on a short yesterday on MicroStrategy up here. I took profits on that trade yesterday, as we did get the breakdown right here, is when we entered the position, and then we got a breakdown and continuation. So right in through here is when I took profits on that short. I'm still holding it, but I mean, it doesn't have to come far to stop me out. And that's the issue with looking for shorts on range lows. Just literally retesting the 21 4-hour exponential moving average would put this thing brutally close to my stop loss. But I guess you could argue that if dollar does in fact stop going lower today, then maybe you could put on fresh shorts on Bitcoin. I just don't. I think your weekly range for Bitcoin and crypto markets is pretty much done. That's a large weekly candle. For you to see much more downside this week, it's this late in the week. I don't know. It could. I mean, obviously anything could happen, but the probabilities are less likely now. All right. All right. Hopefully everybody understands things like that. Anyways, let's talk about it. Good morning, Bravo. Good morning, Pix Property, Peter, Paper Wiggleman, everybody. Good morning. Good morning. Greetings to you all. It always looks bad before looking good. Yep. There's a famous quote in The Dark Knight where the dawn is always darkest or dusk is always darkest just before dawn, or something like that. Yep. It means the same thing. Exactly the same thing. You're correct, my friend. You're correct. Good morning, Trade Talker. Smash the like button, says Oxum. I appreciate that, Oxum. Run DMC says Sailor just proved he cannot sell. What do you mean? He has literally sold. What do you mean? Yeah, I'm not sure. Not quite sure. What's going on with this? Let me fix this music player as it just broke. All right. Go back. I couldn't even hear the music first off, but I know it was playing. Rock. Yeah. Oh, I can't hear it because my headphones have come undone. Sorry, guys, if I blasted your eardrums out. I apologize. That's what's happened. Okay. Fixed. Done. Yeah, he's sold already. He sold, I don't know how much, but it was a very small amount. It was in the millions, not billions. So I'm not quite sure what he has literally sold. He sold. So yeah. That doesn't make any sense. All right. Anyways, moving on. Can you wait, please tell me he did he short? Did I short? What are you talking about? Did he short? Did I short what? Silver? Yes, with a tight stop loss. I'm also short USD JPY with a tight stop loss. On USD JPY, if you make a fresh 4-hour swing high, I will be stopped out. So, right here, if you get above this stuff up in here, I will be stopped out. That is where my stop loss is. And on silver, if you get above this right here, that is where my stop loss is. Yep. Like I said, I like it all the way down to here, so don't risk a lot of money on it if you try to take this trade with me, because this is the first potential entry. It could be higher. This is where I would rather put the trade on, because at that point, if you get up there and fail, that means you will have liquidated everybody that got short yesterday. So, yeah, this is the best place for the entry. So if you do take the short on silver right here, maybe try to put the position size to where you only lose 1% of your account if it gets up to 75.48. All right. I know that seems like a lot, and it kind of is, but here's my thing. If you get a dollar breakout, right? If you get, this is clearly a range on silver. It is clearly either consolidation or distribution. Now, we won't know which one it is until we get more time on our hands. But this is an expansion. This is contraction. So generally, if we're looking for expansion, we want to enter trades when we get contraction. So I still like the short, but I need dollar strength. If it breaks out of the top side of the range, then it would be considered consolidation, or it would look like consolidation anyways. But there is a measured move to make here on something like this, right? So essentially, we'd be looking for something like this. So long term, I can take a couple stops on this trade before I actually get it right. Because if I get it right and it does end up breaking down and giving me a larger downside move, I can target like $68. So I can eat a small stop here today and maybe even here today, and then maybe try it tomorrow up around Tuesday's swing high. And then if that one ends up working, I will make all that money back plus a lot more, right? As of right now, the shorts are being paid to hold trades, or the funding fees on silver are paying sellers, but it's a very small amount of money. It doesn't give the sellers the edge. I'm just looking at trend, what I see here. On the near term, it looks bearish. If I pull up my 4-hour moving averages here, the 21 is below the 200, which is typically bearish. The 200 has been acting as resistance, which is typically bearish. So if this is the first part of a potential breakdown, I want to look for shorts on the pullback, and then hopefully we get the expansion lower. So essentially, this is what I'm looking for. So don't go in balls deep with a big position size. Make sure you understand how to mitigate risk. As I can't tell you what to do. I'm not a money manager. But yeah, I am looking for silver to give us that continuation. I think the dollar is far too expensive to short right now. I don't understand why it's pulling back after breaking out. That's not a good sign. But if it fails to break down with any severity today, I think the upside still looks fine here. Now, it is into resistance, being the 50-week exponential. So there's that, right? There's that. The weekly still looks very bearish. So I can see retail putting on shorts. I'm fine with shorting the dollar for scalps. But for the longer term hold, because the dollar has been so sideways, I think I would rather position for a longer term hold on the dollar, hence looking for longs. This is a clear support test. Just because we're pulling back today does not mean that this weekly expansion is over. You would almost need to close back under the open to convince me to look for shorts next week. You know what I mean? But even then, I probably wouldn't. It just depends on how this candle closes. But right now, the clear directional bias is up. You have a fresh breakout here. This is just a correction. That's last week's low. So if we fib this week's range, as of right now, boom, you're pulling back to test the 618 retracement, which is a very standard retracement level. So as long as you're trading up here, I still have dollar long biases. All right. Yeah, I'm still positioned for dollar longs. So right now, my Forex portfolio, I am trying to position for USD JPY short, which is not my overall bias or my main case. My main case is dollar longs. So I have a short on euro dollar also. So those two trades kind of offset one another, but I most likely will get stopped out of the USD JPY trade, not the euro dollar trade. The euro dollar we put on Tuesday though. So I don't know if euro dollar is setting up for a short this morning. Probably not, if I had to guess. Let me look at euro dollar real quick, and then we'll talk about the synthetic call on USD Turkish lira. All right, so yeah, euro dollar's into weekly support. That's why it's bouncing. It's a very tight range this week. Today's Thursday. It looks like you're going to trade as an inside week. Very choppy. Very choppy. Yes, today's a bullish engulfing. So would I short that? No, not at all. That says that the near-term momentum for today is too much, too great. The trade would be tomorrow, if it even is a short. Now, if it were to fail back under the high, I still wouldn't love that. Because look at this bullish momentum. Boom, 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 boom. There's something to be said about that, right? Just that heavy bullish momentum could indicate that something has changed on the near term. So trying to short into this could be violently brutal. There could be enough upside volume that has already traded that it could continue to make higher highs all day long. But you could slowly grind for the rest of the day, is what I'm saying. So if there's going to be, I mean, it is still a potential short. I just don't, it's not a trade that we like. It's not something that I would take. Too much momentum, man. So if there is a legitimate short dollar trade being put on right now, then we should be fine with USD JPY. It should work. All right. If not, then euro will ultimately roll over, and that one is fine. So we'll see what happens, but just make sure you use tight stops. All right. What is Bitcoin doing real quick on the near term? Huh. So did it pull back to the mid? I don't think it did it? It absolutely did, right here. So it pulled back to the midpoint of the prior 4-hour candle, or the candle that's being formed now. There is a couple hours still on this candle. So, I mean, this thing could still close as a bearish engulfing. There's 2 hours, 13 minutes on it. Just be careful. It's super volatile right now. It's moving a lot. Like I said, from this swing to here is a 2% move. This week was brutal on Bitcoin. That one day was down over 6% from open to close. Tuesday. Right here is your open Tuesday. And it literally did not give you a wick higher. So the entire day range goes straight from the open to the close, which is here. So that's a nasty down day. Flat top, opened and dumped. Nasty. That day right there was down over 6%. A lot of volatility here. Lots and lots of it. And yeah, it's kind of a mixed day. Dollars should be trending today. We should be seeing the dollar pull back to about the mid and then taking off. So the fact that it's doing this is very curious to me. Very curious. We knew this is a big resistance, though. It's last week's high. You liquidated last week's high and closed above it yesterday. And then the open literally gapped down. You traded up slightly to fill the gap, and so far you've puked. It's crazy sauce. You can see there's your gap fill. Here's your close. Up and closed, and then the market opens 2 hours later with a gap down. How does that happen, right? The market's not even trading. And then there's your gap fill and roll over. So it does look like this is legit sell side pressure on the dollar. Well, obviously the best place to look for dollar shorts would have been here. And I'm not just saying that in hindsight. I literally said that Tuesday. If we get above the open, then the next place that I would be interested in shorting it would be last week's high. So I said it in foresight. I didn't take it, though. I didn't take it because that's against my bias. Yeah, the dollar, it's hard to hold a bias on the dollar right now. So because the dollar is not showing us a trend, it's showing us straight sideways chop fest. It is garbage. So even if you're looking at moving averages, they're not going to be very helpful in this scenario. So the only other thing that we can look at, if we look at the macro doesn't look good. You have elevated oil prices. So that seems like it would be dollar strength. And then you also factor into that it's super expensive to short the dollar right now. And it isn't trending. I just don't see billion-dollar funds putting on short dollar trades unless they know something. You would have to be very convinced. Here, not convinced, convicted. Right? That's about the only thing I could say. Committed and confident that it's going to go lower, and they would only be confident that it's going to go lower if they know something. Because right now, it just costs too much money to even put a short on. Funding rates don't always move the markets, right? Funding rates or carry trades. But the carry trade has ruled the dollar pretty much for a long time when paired against the yen. But compared to other assets, we can take a look at the interest rate spread and find, I mean, obviously we know that the interest rate yield curve spread is best on dollar yen, but we can look at it versus other assets. There's also a pretty decent spread there. Euro has a decent spread as well. So, I mean, you can see why it's expensive to be short the dollar right now. It looks like pound would be the best option to look for dollar shorts. So you would need to confirm that, obviously, with your brokerage and the rollover rates that you pay. So pound dollar is going to be the best option, and it is. You're only going to be paying about 48 cents on 10,000 units, which is a mini lot. One lot is 100,000 units, a mini is 10,000, and a micro is 1,000. So you'd be paying about you're paying 50 cents on 10,000 units to hold shorts. So I could see him targeting pound dollar for short dollar. So that essentially means you'd be buying it, right? You'd be long. You're only paying 43 cents. Still not bad compared to short USD JPY, which is over $1. And then for euro dollar longs, you're paying $1. So it's expensive to short the dollar right now. Pound would be the best way. All right, let's look at pound. Pound dollar. Let's see if there's a setup there. GBP USD. There is a setup right here for short dollar. No, there's not. You'd be short pound. Sorry. That's the opposite trade. That's a long dollar position if you short the pound. If you wanted to get long dollar, right here would be a setup. Literally. You're testing the 21-day exponential. Yesterday was a downside push. So as long as you're under yesterday's high, which you are, then there is a valid short trade there. Now for longs, the trade would have been down here. You would have been looking for longs down around the prior day's low. And so far that appears to be what they're doing. But you're seeing a little bit more indecision here and more two-sided trade here because it is okay. It's not so expensive to take those dollar positions. So dollar yen is pushing. And we're finding a little bit of support. Not really, though. What's oil doing today? Oil is selling off a little bit. So that's probably what's going on there with the dollar pullback. It's confusing. I get it. But once you've been doing it for quite a bit of time, it is not that confusing at all. And especially once you get any kind of money at all and you're trying to essentially beat inflation at all times, you look for everywhere you can to earn $1 on your money. It's as simple as that. So USD JPY is trying to go up on the near term if it does fail here. So this could be a trap, right? It could be a trap. Let's see on the 30-minute. Okay, so we have intraday resistance right here. So me getting short USD JPY was a little early. Now, not now, but when this candle closes, basically what you're going to pay attention to would be this, as this is resistance. So you would want to see a close above to kind of signify that you're going higher. Then on the next open, the very next open, you're going to pay attention to this high. And if you see any trend continuation above this high, then USD JPY shorts are wrong. But wherever this candle closes, when the next candle opens, if it fails to put in a trending move above that high, you could still hold shorts here. So a little early on the positioning. But if it is going to be a trap, it's going to be set probably in the next 5 to 10 minutes. So a little early on the initial entry. These trap moves don't always happen, and they're not for the faint of heart, right? Most retail traders don't have very many. I don't have very good patience either. I still like, I wish silver would push up into here, because this still looks like an upside move. But it is what it is. The two positions offset each other. All right. Yeah, Sailor is definitely underwater for sure. Yeah, as long as Bitcoin is under his cost basis is 75.7 the last time I looked. It might be different now. I don't think it is, but it could be. But yeah, his cost basis is up here. They are definitely underwater. Something that we noticed yesterday. The reason we put the trade on MicroStrategy yesterday here was simply because MicroStrategy had not liquidated April's lows at that point. It still has not done it. So April's lows on the actual stock, MSTR stock, right? You have not liquidated April's lows yet. While on Bitcoin, you had already liquidated April's low at that point in time. So that's the reason we decided to put the trade on MicroStrategy. If you look at the same day, Tuesday, that big downside day on Bitcoin, it was literally down all day. MicroStrategy put in 2 downside 30-minute candles and then chopped sideways for the rest of the day. So right here, when we got this push up on Wednesday morning, this was during the premium or during the Discord members live stream, we put this short on. We faded this rally, assuming that it was probably going to go down and take out April's low. And we did get the downside trending move yesterday. So we didn't see a trade on Bitcoin because it had already nuked April's low. Instead, we decided to take it here. And that trade worked out very good. Nice profits on that one. Clearly, we were on the right side of the market all week. Just getting stopped out on the Bitcoin short Sunday is literally shitty. I understand that. That's going to happen. You're not going to catch every single move. You can be the best trader in the world. That is still going to happen to you. It's going to happen to you because intraday volatilities and intraday chaos is unpredictable. It is unpredictable. There is no strategy in the world that will have a 100% hit rate. None. So you're going to get stopped out. And we don't chase. We never chase price. If we don't get a decent size correction to enter a trend continuation move, we will look to put those positions on elsewhere. Now, obviously, in hindsight, right? In hindsight, it would have been smart. Okay, so here you go. So if this is a trap, then it will roll over now. And it does appear to do that. Now, with that being said, if this candle does not make lower lows, or the next candle does not make lower lows, then a short on this is probably wrong. Or if on the 5-minute chart, or 1-minute chart, or 10-second chart, I don't care, any time frame chart, if you start making higher highs above 159, spot 922 intraday, and you see that continuing, the short is wrong. The short is wrong. But this is a decent look. This is what we would want to see if we were anticipating USD JPY was going lower today. It's exactly what we would want to see. Now we just need to see the lower low. we get the lower low, that'll be beautiful. And downside take profits are going to be tricky on this one because you have this nasty ass wick. So in a sense, this candle has already cleared out most of the liquidity that we would be targeting. That's a 38 pip move. That's huge for this asset. On an intraday basis, hell, on a 30-minute basis, that's a big move on a day. Like if the whole day range was that big, that would be a decent sized move. So this is weird. So that makes downside targets a little bit tricky. But yeah, I mean, I would want to see lower lows today. If this is going lower, I would definitely want to see lower lows today. I would want to see lower lows than yesterday, but I just don't know if you're going to get that. This was a ginormous move yesterday. A massive bullish engulfing that happened going into the BOJ intervention price point. So it is strange that this happened the way it did. You liquidated Tuesday's price action, but went deep. And then, bam, liquidated this. And now today you're pulling back? No, today should be moving higher. So very, very strange price action happening here. Silver starting to kind of give us a little bit lower of a dig. And we got lower lows, so that looks okay. I don't care about moving averages on anything smaller than a 4-hour. I usually don't even care about 4-hour moving averages. The daily and weekly moving averages are the ones that we want to mostly focus on. And as you can see, like, this does look like it wants to go lower to me. It does look like it wants to break down. It's just there is a shitload of support under price. So if it breaks down, I think the breakdown could be sizable. Like it could be a large range or could be a large move lower. Yeah, you could probably target $60. That would be a $60 target would be far outside removed from that measured move, but we'll see what happens. That's the thing. We can't predict it. We can only position for it. And time will tell us if we're right or wrong. Okay, so this kind of looks like it still wants to go higher. If this breaks down, we'll probably be wrong on the silver trade. So let's go talk about this synthetic call strategy, USD TRY. All right, so clearly I don't condone anybody trades this asset. All right, but when I was looking at the funding rates or the rollover rates this morning, looking at the best way to trade the dollar or to look for dollar shorts, I noticed how insane the rollover fees are on this product. $21 on 10,000 units. Now, I understand $21 is not a lot of money. I get it. But if you're looking for growth or an edge, clearly it's expensive. You have to pay $29 to be long USD Turkish lira. The reason it's so expensive is because the odds are pretty good it's going to work, right? So the fact that those odds are, it's probably going higher, that means they have to jack up these funding rates to essentially call in shorts. Like, yeah, we know you're not going to make money on a trending move. However, if you're willing to be a market maker, then here's your opportunity. So because you make $21 it's not even 24 hours. Rollover rates happen at 5 p.m. New York Standard Time at 5 o'clock p.m. That's the close of the day. At the close of the day, if you're short and you don't get stopped out at the close, then boom, you will get paid $21. So in a sense, all you need to do is look for shorts on USD Turkish lira at the high of day, though. That's when you want to put this trade on, and you're not at the high of day. So putting the trade on right now would not be advisable, but if I was trying to put this trade on, well, the high of day is up here, and the odds of it getting up there are very, very slim. So today's not the best day to do it. Maybe tomorrow. But essentially what you're going to do is at the high of day, you would put on a short, and then you would throw a very wide stop loss out there, like a 3 standard deviation stop loss. Massive width. However, you need to keep it under 21.97 because that spread is the money that you're looking to edge out of the market here, right? You're looking to lose less. So you would put on a trade with like a stop loss of $19 on 10,000 units at the high of day. You put on the short, and then hopefully at like $19, if that stop loss is far enough above price, that when you get this liquidity, the thin liquidity spike at 5 o'clock, you don't get stopped out, then you will generate that yield, that $2. And you can close the position and then do it again the next day. So in a sense, you're long time. All right, so JPY is pushing. That's a higher high. Not quite. Almost. It's the expansion above is what we don't want to see. This is still fine. It's starting to look a lot less fine, though. We don't want to see an expansion above. If we do, we're probably wrong on this. But yeah, you could generate a yield on a every 24-hour basis, and you could make a couple bucks per day. But there are times when this thing has heavy volatility spikes, like here. Chances are if you were short here and had a very wide stop loss out, you got stopped out right there. Now that was after 5 p.m., right? Because this candle closed. Oh, wait, no, it wasn't. Yeah, it was. This candle opens at 1700 hours. So technically speaking, at that point, you should have already been paid the $21. So when you get this gigantic spike, it will take you out of the trade. You'll lose $19, but you got paid $21 to put it on. So you're net positive $2. And you can continue to do that day after day. Now, obviously, I haven't tried this strategy at all, but you're essentially long time. It's just like a synthetic short call, everyday expiration, right? Like on an everyday basis. So yeah, it would be like a 0-day option short call strategy. Only instead of doing it with options, you're doing it with spot price. And occasionally you will get stopped out, so you will lose. You get what I'm saying? Overall, like, I bet we would have to back test it to see if it generates profit or if it doesn't. But there are a lot of times when you don't get massive vol spikes. to where your stop would be safe, most likely. Now, you're still going to take a losing, you're still going to always take a losing trade because this always goes up. But over time, you get what I'm saying? Over time, you would generate a profit, potentially. We'll backtest it. We'll see. All right, so there's a higher high. It's not trending, but still, that's enough to piss people off because obviously people got stopped out right there. It needs to start to head lower soon, or I'm wrong on this. You know what I mean? It needs to start heading lower soon, or I'm wrong on this. It's as simple as that. But we can clearly see this is where the market is being made. So the sellers, when they're wrong, you're going to see an expansion. That's why this is the point at which we mitigate risk. Because from this point and beyond, we know nothing. Got 17 minutes on this close. We do not want to see a higher close. Do not want to see that. And the silver trade is kind of looking like, or at least starting to feel better. This is about where I would expect the buyers to show back up if they were going to buy. So we're right at that precipice, right? We're right at the precipice where we're probably going to know where the dollar's going here in a minute. It's either going to ascend or it's going to descend. Bitcoin is still expanding? What? You mean it's not going lower? Why not? That kind of feels good, but for whatever reason, this isn't rolling over yet. It's gonna have to start soon. It looks like it wants to go higher, clearly. Sorry, it's just this is it. Like, this is it. This is how we're gonna know soon. It's gonna break to the upside and silver's gonna roll over, or this is going to roll over and silver's probably gonna find support. Now, they don't trade inversely to one another. We're looking at both of them. We're just looking at the dollar part of both of the assets. The problem is there's no real weighting or no real way to see how much weighting the silver has with it and all that. They're not inversely correlated. So they're not like a perfect offset of one another. It's funny how the market works, right? The market literally, everybody knows that it's either here or nowhere, right? So the expansion will be violent. I gotta say, it really feels like it wants to break out. It can't even make lower 1 minute lows. Can you place this USD JPY on weeks, right? Oh, I don't know. I don't think so. I haven't tried. I don't even know what I would look for. USD JPY. No, I don't see it. No, sir. I know you can trade Euro futures on weeks. I don't know about yen futures. So you wouldn't be trading USD JPY on, you would be trading yen futures priced in tether. Now you can trade Euro futures, but it's priced in tether. So it's Euro USDT. So I guess maybe look for JPY USDT. JPY? No. Nothing. What is the futures ticker symbol for yen? It's been so long. I know it's like... So 6J1. Yeah, I have to assume it would be JPY versus US dollar tether. I can't imagine it's going to be 6J1 or 6J USDT. Yeah, I can't find it. Nope. Nope. I use Forex.com for the broker. I used to have Oanda. Oanda sold out or got bought out by somebody else. So I just basically quit using Oanda. Forex.com isn't the best brokerage out there in the US. There are other exchanges that have better fees in terms of Forex trading. But Forex.com is at this point the biggest, I would have to assume. Let's find out. Let's ask Grok what he says. Who is the largest? Forex.com. Yeah, StoneX. Oh, and it used to be the biggest, but they got bought out. Charles Schwab is going to be number 3, Tasty FX number 4, and then Interactive Brokers number 5. But there is also somebody else, but I'm not sure if they're still... I mean, there's a lot more probably, but these are going to be your main ones, obviously, for trading FX in the US. Yeah, so this is chop. I'm not going to get chopped up here. If this doesn't start to roll over in the next 5 minutes, I'm going to bounce. Because I'm not real. I mean, I'm getting the move here on on silver. The short is working on silver. So I mean, there's the probabilities are that we're going to get stopped out of the USD JPY position. Now it could stop going lower here for sure. It's about a midpoint check, so we're kind of still at that precipice where we don't know which way it's going yet. The DXY is not helpful either, as it's just chop. Let me see what the euro is doing. If that's helpful. Well, it's gonna be not. It's not gonna be helpful, right? Because it's gonna be the exact opposite as a dollar. Yeah, it looks like USD JPY wants to go up. See, the problem is Forex.com does not give us. They do not give us volume data, so volume delta is not going to be very helpful on Forex.com, anything Forex.com. This is Binance. So on Binance, which is the largest crypto exchange, the buyers are more dominant or more aggressive. Let's go look on Forex or FXCM. The buyers are more aggressive here on this as well, but it's not trending. But still, the buyers are the aggressors. Let's look at USD JPY on FXCM. Yeah, I mean, this looks like it wants to expand, right? It's already moving higher. And the sellers are the aggressors here. So it's trending at this point. It's not trending by a lot, but it is trending. Yeah, it's probably getting ready to break. But holy shit, it is playing some games, ain't it? Generally, we know pretty damn quickly if we're right or wrong. And this has been going on for an hour now, so. Yeah, you kind of set a trap. Shit. Yeah, this was the trap. So this is expansion. The next candle is probably going to be the expansion. But you're starting to get it now. With 5 minutes left to go. I mean, could this be what they're looking for? I mean, it's possible these wick highs is what I'm talking about. But this is the clear resistance. Yeah, it could be. But, I mean, at this point, this looks like it wants to go up. That 4-hour high is roughly about the midpoint of this candle. So this looks like a legit breakout, right? You're most likely heading higher. Which is good for the silver trade. Should be. USDT and Binance. Perps. Still playing freaking games. Yeah, you think games are played in the crypto market? they're pretty they're pretty confident in the crypto market with just doing straight up illegal shit. In the forex market, they have to be a little bit more slick about it because they're regulated. Regulated. I mean, it does look like it wants to break out. You have liquidated those swings. Barely, but it has happened. And Bitcoin is starting to fade a little bit. Not really. Looks okay. I mean, it doesn't look great, but you've made fresh day highs. Not yet. Almost. Right there's your daily high. So being this far above this candle right here, it almost seems like that would be inevitable at this point. It's a dollar story. I can't wait until the spreads tighten up on this, because then you will start seeing more two-sided trade, though, for sure. Right now, it's mostly you just got to be a buyer. And it has been like that for a long time. It's just not at these prices. I don't like being a buyer, not with 160 right there. 160 is clearly a major area. It's huge. That's looking at FXCM data. If you're looking at any other data, it's at all-time highs, or so damn close to them. So they might not want to intervene at 160. They might want to wait till 165 or 170. But if they were to hike interest rates, you would also need USD to lower interest rates. And in that scenario, I could make a legitimate reason to look for shorts. Right now, because it's so expensive to hold this for any length of time, there's your expansion happening now. Yeah, so there she goes. It's not a short. Not a short. I mean, if it rolls over now, there's nothing we can do. There's no edge there. The edge was it rolls over in the next 30 minutes or it's not rolling over. So, I mean, if it fails now, I've been stopped out there. I'm not going to continuously put on risk to try to, I wanted it to stop. It didn't. It's done. So hopefully silver continues to put in lower lows on the daily range. If not, I'm going to be wrong on two. But this one's better for a long-term hold, I think, on the short. But right down here is where you need to take profits if it gets down there. 73.17. And then you leave the small piece on for the downside break. The small piece. Because if it is going to break down, that small piece is going to pay you way more than the original trade did. And those are the trades that make the money at the end of the year. Those are the ones that add up. All right. Can you have a look at SIVE? I got in at 30, but this company is currently 25B $25 billion market cap and has been potential to reach 70 to 100 billion. So I can still 2x from here, but it feels like this is topping. What do you think? So we looked at this almost every day, right? We looked at it Tuesday. I can't predict price. I know nothing about the company. Nothing. I just have to take you at your word that it has the potential to reach $100 billion market cap. The fact that it's not an American company makes me kind of wonder if that's even possible. But I mean, if you say so, I'll believe you. The chart looks fine. But yeah, it's over freaking bought for sure. It is massively overbought, dude. It literally hit 99.87. $98.78. This indicator only goes to 100. Now, with that being said, it can stay at 99.99 for 10 more weeks, and it could go on up, as you stated, right? There's no way. This indicator is never going to be a good indicator to look to take a short, but it is a damn fine indicator to look to take profits. You said you got in at 30. So why are you still, why have you not taken profits yet? Like, I can't tell you when to do that. I am not a money manager. I don't have the license to do it. But I can promise you one thing. I would have already been out of this thing so long ago. When you're literally setting in longs for these massive returns or have massive expectations on returns, you should have already scaled out. You should just be holding whatever's left on the position, and then you can just continue to hold indefinitely or whatever. You need to have a strategy. When you take an investment, you need to have an obvious price target. You can't just be like winging it. But yeah, it's probably going to pull back soon. And it's probably going to be a violent pullback to the point to where, like, could it come back to 30? Yeah, it could. 30's right here. It could definitely come back down there. Are you willing to set through that? If so, then continue holding. I don't know what to tell you, but I mean, dude, you've made over 100% returns. If I would do that, if I knew, yeah, 100%, it's double your money. Double your money. You've doubled your money. I get it. People want to invest and, buy the next Amazon. So they can invest at $3 and then sell at $2,000. That is gambling. It's just hope. Now, if it's money you can afford to lose, hang on to it. I don't know what they do, what the potential is for this company. It's not in the U.S. It's not a U.S. company. I don't trade this market. All markets work the same, though. All markets are just, human emotion. This thing could pull back any minute now, and it could be violent, and it could definitely get back to $30, as that would be what? I mean, if we measure just this year's, what it's done this year alone, 786 retracement would be $25. Could that happen? Absolutely. Nobody knows the future. But it looks really good, obviously. It's just getting a lot toppy. Yeah, eventually the sellers are going to win. It's just a matter of time. You got to know when you want to scale out. And then but investing is different. Long-term investing is different. Yeah, I would ask somebody that knows more about this ticker, this company, and because like AI, the AI stocks, some of them are well into 3, 4, 500% returns. Well into it. Here's a good rule of thumb for investing long term. If the asset is a growth asset, when you're oversold or overbought, oversold, if it's a trending asset, those are the entries. Overbought is when you get out. And that spread, that's your money. Wherever the price is, it doesn't matter. That spread is your money. If you could just repeat that process over and over and over again, you would be fine for the rest of your life. Money would not be an issue for you. It's the emotional stuff that traders fail at. Greedy is an emotion. Like being greedy is definitely an emotion. If you've doubled your money and that's not good enough, you are being greedy. You be greedy when everybody else is fearful. That's the way it's supposed to work. Right now, you're being greedy while everybody else is being greedy. It's very overbought. Like, I have nothing else to say on it. It's going to pull back. Price is elastic. It could continue to trend for in the next 10 weeks, but eventually you're going to get in a very aggressive pullback. Blow off style, potentially. But yeah, I mean, long-term investing, weekly oversold, you buy, you take profits at weekly overbought. That's typically how it's done. So if this week closes, you haven't made lower lows, and some analysts require that lower low for their signal. And that doesn't mean they're right, and it doesn't mean they're wrong, okay? But if this candle closes under these closes, you will have a bullish diverging signal here. You don't need to make the lower low. And the reason I say that is because this indicator it prints on the close, not the lows. And that's where the divergence is. But, I mean, it's fine if you need lower lows before you can call this bullish divergence. But if you didn't buy when it was oversold, you're getting a chance now to potentially be a buyer when you have a bullish diverging signal. I get it. People are expecting new lows. And you have many other people expecting way lower prices, like 20K. You realize that if Bitcoin hits 20K, it's fundamentally broken, right? It is no longer performing the way it was built to perform. So Bitcoin was built to perform via math. That's how it was designed, with math in mind. And then all the other things have happened so far, but fundamentally, if Bitcoin were to get to 20K, it would be broken. It would be done. It would be toast. 4-year cycle would be over. Everything would be over. It would have made a lower low, which it has not done ever on a percent gain, on a percent basis. Like Bitcoin has never made a deeper retracement in a bear market ever. So if that happens, that's bad news for everybody, not just me, but everybody. Anybody that owns Bitcoin, that would probably be bad news. I'm just saying the odds of it getting to 20K are so slim, it's almost non-existent. In terms of looking at probabilities, not black swan events, just probabilities. This expansion has been a vicious one. It could continue. You could get many more weeks of downside, but I just don't think we're going to see those kind of prices. It is 100% possible. But if you're not going to buy it oversold And then again, when you get another opportunity to be a buyer for the long-term gain, right? You're not buying Bitcoin here because it's $63,000. You could literally blind this chart over here. Just get rid of prices, period. Right? Just completely hide them, get rid of them. And only look at this indicator long-term. These are and have been always the time to be a buyer on Bitcoin. Every time. Every time in history. So essentially, if you had been averaging in on your Bitcoin longs in the past, now it doesn't mean that this will work in the future, but in the past, had you been doing that, you would have been averaging in at bear market lows, which has essentially been the best place to do it. And had you been doing that, your position is still up 300%. But think about that for a second. Like, wow. Yeah, it would suck that it's off the all-time high, but compared to where you bought last time, price is 300% higher. So you can see why people like me look at this and say, yeah, it doesn't look great, but I mean, it ain't bad either. My equity curve looks like this chart. It goes from bottom left to top right. And that's generally what we're trying to do as investors, is have a smooth equity curve. You want to see a smooth equity curve? Let me show you the smoothest equity curve I have ever seen on any asset. I want you to just look at that purple line. Forget about price. Just look at that purple line. Now imagine if you could get your equity curve to look like this purple line. You would have one of the smoothest, best looking portfolios on planet Earth. That's all we're trying to do as investors. We're not trying to do it. We're not trying to make it look as pretty as that, but it would be freaking nice if I could. So generally speaking, since this thing looks like this, should I be concerned? No. Not yet. It has been a very good performing asset. And if I intend or expect that to continue in the future, I know this is where I want to start putting on that long risk. Because in the future, I want to take profits when this indicator is up here. Buy low, sell high. That's the odds. I mean, that's the goal. That's the game. Buy low, sell high. So Bitcoin is in value here. It is giving people another opportunity to, it might be a little early. I think maybe we should see what it does next week, because there's a good chance that we see downside continuation from this, depending on what the dollar does, obviously. The dollar continues its breakout that it's working on here, which it looks like it's going to. This is, as long as you're above this swing low right here, this is a very normal pullback. Very, very well within the context of a breakout. It sucks that it's happening here right now, but it is what it is. As long as price is not breaking under this point, the trend is still higher. So Bitcoin could still make some new lows, right? So we definitely want the dollar to kind of get in line, roll over, and start heading lower for Bitcoin bullishness. But I would actually love to see Bitcoin outperforming even with a strong dollar. That would be chef's kiss. In my opinion, if Bitcoin is rallying and the dollar is rallying, holy cow, that would be like one of the best bullish signals that you could have. So be on the lookout for that potentially in the future. So even if dollar is going up because we're not getting rate cuts, if Bitcoin starts to outperform the dollar, then chances are you're going to see higher prices. But as of right now, this is definitely helping to put pressure on it. So this week it could be early. Maybe next week could look to get in around 60K, 61K. But you're adding slowly over time for the long-term hold. You're not going in balls deep with your house mortgaged up and then 100x leverage. That doesn't work. But yeah, it looks rough. I mean, it looks rough right here. This is a midpoint. That is a legit breakdown. It could be a trap, but you know what I mean? We generally don't look for this kind of behavior for traps. We typically look for continuation from this kind of behavior. People were very, very scared this week for whatever reason. It doesn't matter the reason. They were scared. And Bitcoin is showing us that fear. So we're probably going to need a bullish catalyst of some kind to get this thing to bottom in the future. Where's MSTR at? It's not really doing anything. It's not threatening my short, so I'm just going to leave it on. I already took profits on it, so I'm good. It can come back and stop me out, and it will have been a very profitable trade. I'm all right with it, but I see no reason to close it yet. For anybody that's trying to buy dips on Bitcoin, I think you're early. A little bit. I mean, volatility is still expanding. I mean, you clearly are massively oversold. So this thing could bounce at any point. The problem is it doesn't have to. It can stay pinned at oversold as price continues putting in new lows. So we don't typically want to be a buyer here, right? This is a signal to take profits, not to open new positions. So the momentum is still very strong to the downside. The S&P 500 has just filled its downside gap, but the S&P 500 has pulled back this week. Some people are starting to call it a top. It could be if the dollar starts to rally, but I think you would need to see the dollar above Q4's highs. The Q4 of 2025's highs over here. This is the breakout point for the range. If dollar is expanding in an upward direction above this, you probably would see a little bit of a risk off in the markets. But then again, those AI stocks could still rip. Like, who knows what's going to play out there. But in terms of a pullback, the S&P is very much inside its expected weekly range for this week, which is right here. So you have not hit the bottom edge of the weekly expected range. But this does look like it's potentially just a gap fill. And I could approach this in a similar fashion as I would any other scalp, to where, like, if it fails to make higher close above the prior highs, then I could potentially look for short scalps. Devol on Bitcoin has pulled back all of today's expansion. And the VIX looks fine. It's still elevated, but it has gotten lower. It's not fresh year lows, but it's close. Right there's your fresh year low. I mean, the S&P still feels very bullish to me. It does not look bearish at all. I mean, at all. So I would say that if 74, 75 holds, it's probably a buy the dip going into next week. And the risk on in terms of headlines, it's still very much a risk off feel out there as long as oil is elevated and the war is still on. Like, they're not coming to any kind of terms to settle this thing down any. Now, as far as the shooting is concerned, I don't think there's a whole lot of that continuing to go on. But we don't want to see that escalate either. But, I mean, at some point, they got to make a deal, or oil is, the longer it stays elevated, the worse overall it will be for the economy. And it's been elevated now for some time. I do believe that if they come to an agreement or a deal, this will get nuked probably back down to about $75. But trying to catch it has been a pretty difficult scalp. We have caught some really nice trades on it. Yesterday we were actually watching to see if the longs would work, but we knew we were looking for range expansion, and it ultimately did give us profit targets, but then it rolled over. So it does feel like it has lost its momentum going into the end of the week. You've definitely lost your VWAP. So I would probably, because of this, have more of a near-term bearish bias on oil going forward. I just wouldn't love the short right here. Not after this expansion has already occurred. Now, if it spends a lot of time trading sideways here going into tomorrow's session, then yeah, I would be willing to short this area tomorrow morning. But we'll see how it plays out for the rest of the day. Clearly, I was wrong on USD JPY, as that was the expansion there. Boom, 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 boom. Right there. But we are seeing our short workout here. So that's the benefit to mitigating risk on opposite sides of the trade. And because the dollar is traded in so many other currency pair setups, we can look to trade the dollar via this way. So yes, our USD JPY trade did get stopped out, but our XAG USDT target is getting hit right now. So we lost a little bit of money on the USD JPY, and we made a lot more money on XAG USDT. Both of those were to offset each other, and then whichever one goes on to hit targets, that's the one we want. So yeah, it's not a total gain, but it is a gain nonetheless, and that's all we're trying to do. So kudos to anybody that's short silver right now. Now take profits, because this is support. You got to take profits. You got to pay yourself for taking the risk. But don't close the whole position, because I am expecting higher prices on the dollar. That is my base case right now, unfortunately. Price is king, and price is telling us it wants to go higher. It refused to roll over last week. This is just a pullback here. You had a fresh break yesterday above resistance. Today's testing that old resistance now as support. So I would anticipate tomorrow you see further upside on the dollar. I don't know if it'll be another breakout or anything, but so that could put pressure back on Bitcoin. However, if oil continues to sell off, then maybe we don't see that dollar pressure, as the dollar is called the petrodollar for a reason. So keep an eye on Petro. Petro is pretty much leading the markets, I think, right about now. And until Trump reaches some kind of deal, I don't think oil's going to fall. It's had plenty of time to fall, and it is trending lower. But just like silver and euro and dollar, there's a huge level of support here. The bounce makes sense. The bounce makes sense. But if the sellers can beat it back down, then eventually, maybe not not this week, obviously, but next week or the week after that, you could see that expansion lower down into the 80s or mid 80s. That could go a long way into helping dollar weakness, potentially. But until we get the Fed and the BOJ, we're going to have to trade what price is telling us. And right now, the dollar's breaking out of the range and looks to want to go higher. Now, if you break back under these lows and see a trending move, then this will be a failed breakout. That would be good news, I think, for Bitcoin. Or let's say this could be good news for Bitcoin in the future. As right now, like even though we had dollar, here's Tuesday. So yes, Tuesday opened and closed higher. It was an up day, but it was an inside day. It traded inside Monday's range. Tuesday did. So the dollar was inherently weak on Tuesday. That's a fair statement to make, right? But on Tuesday, that was Bitcoin's weakest day. So even though we saw two-sided trade on Tuesday on the dollar, we did not see two-sided trade on Bitcoin on Tuesday. Tuesday, Bitcoin got decimated. Absolutely decimated. So I would have to agree that we're probably going to make fresh year lows, but I hope that's an opportunity. So the way to play that clearly is it probably won't be the same day. I already have that level up there, should. I guess I do not, but we don't need the war lows. We've taken out those war lows, but there is your yearly lows. That will be a major level to watch, but I don't think it would be a buy on the actual day of the breakage. So if Bitcoin does push, it's going to be, I mean, it could, but if it does, I would be very interested to see what price does down here. Does it tear ass and continue lower? If so, then clearly you don't want to buy that. But if it can't spend much time down here, more than 3 days, more than a week, then it's probably a bid. But most retail will be expecting lower lows from here. Like I said, I've seen 20K targets. I've seen 13K targets. I've seen insanity targets on Twitter. Crazy targets. So yeah, this is going to be the level that everybody's watching. So it kind of makes sense, or feels like eventually, ultimately, it might get here. Even though it is massively oversold on the daily time frame. That's generally when your sellers or your professional sellers are going to take profits. They're not going to completely close the trade because right now they're being paid to hold it. There's no point in closing a short, not all the way, if you're being paid to hold them. And we do know that on an annualized basis, we are starting to see a nice drop. That's kind of what we would anticipate at a major profit-taking level. So this could indicate that you are seeing slight bullish pressure today. That being shorts covering only. You also have some people trying to cherry pick a bottom, but they're not going to make a dent. It's going to be your whoever made price go lower, those people. They're taking profits. So if this could continue to fall back into this seriously negative territory, that would also be a super good sign for Bitcoin. So we'll keep an eye on this, and we'll keep refreshing it, making sure that we have the most up-to-date version, because this was a clear indication last time of when you wanted to be long and not short. Because you were at levels not seen since December and January. up in here, that's the reason why we were looking for the short. That's the reason why we were bearish right alongside with everybody else. It just made sense to be. I did try to get in. It's just I got stopped out. It's fine though. I'll make the money. And I do still hold puts on IBIT. I have not closed my bearish position because that's my protection. If Bitcoin does end up dropping, but I'm going to have to really seriously think about making a move on those now that they've been open. Now that they've been open for 6 months, as they've lost a lot of theta. And the closer you get to your expiration, the more that theta start. It's an exponential curve. It happens on an exponential basis. So right now we're about here on my puts. So I've lost all of this profit. All of that is gone. Right? Obviously, when we made these lows back in February, this position looked beautiful. But I didn't put the position on to make money. I put the position on to cover max loss on the cold storage wallet. But anyways, the way theta decays, it gets exponential. So the closer you get to like 90 days left, the theta decay becomes exceedingly rapid on almost a daily basis. So I'm going to have to roll these out, or I'm going to have to do something. Depending on what price does here in the future will dictate what I do with those puts, as I have to stay protected. But my account is skewed to the upside because obviously that's where the money is. To the upside. I can only make a 100% return if I was completely all out bearish Bitcoin. That's max you can make. I mean, you can add leverage to it so you can make more than 100%, but you get what I'm saying. Price can only retrace 100%. The upside is far more lucrative for everybody. So that's what we want to be. But yeah, I'd say today you're probably going to see a lot of sideways price action. It's not going to give you a large move unless some kind of headline comes out. As dollar's not bearish today, but it's kind of also not doing a lot here. It did make the expansion, so it does feel like this was just a pullback, but you're not seeing any aggressive retracing of this price action. But I'm still positioned long, as the Euro USD is. I'm short that. And now I'm short silver. But definitely take profits. We're going to wrap this up. Let me make sure I haven't left out any important questions, as a lot of times people say you forget my question. But I read every comment, every single one of them. So I'm not sure how I miss anybody. I might not have read it out loud, but I read it, and maybe I just felt like it wasn't anything needed to be responded to. Can you show how to use the fib retrace on running stocks like SIV? Do I measure from last low to high? So the retracement tool is exactly, I mean, its name is pretty much definitional, right? Like, it is a retracement tool. And it's just showing you Fibonacci numbers. So in terms of retracements, in trending scenarios, we typically know it doesn't always play out, obviously, but in a trending scenario, you would only want to see like midpoint or 618 retracements to be as deep as the retracement is. A lot of times, if you get like a 100% retracement, that is a failed breakout. Or it could be indicating a trend reversal. But the retracement is going to be indicative of time frame. So if you're looking to be a multi-quarter holder or a multi-year holder, then obviously you want to go from as close to entry or the low of that time frame's candle. So like when I looked at CIV, for instance, I measured 2026's range only. And the reason is because it wasn't until 2026 that you began to see this explosive price action. You could condense that and say, well, it didn't really start until Q2. Like Q1 was a nice pop, but it literally went from a $4 stock to $16. So when I see things like that, it makes it very difficult for me to believe what you said earlier, right? You said right now it's about a $5 billion company with projections to be a $100 billion company or market cap. Well, yeah, people always project crazy ass targets, always. They never project reality. What you have here is clearly a short squeeze, as this company just last year was trading for $3 a share. So either they did something fundamentally different as a company, or this is mostly hype and will be faded eventually. So they better be printing good earnings every quarter from here on out. Otherwise, every bit of this can be retraced because it's such a euphoric move. So yeah, if you lose the midpoint of this, then you're probably looking lower. And what this does is it just gives you targets. That's all. That's all it is. It's not the end all be all or anything like that. But for bullish continuation, you wouldn't want to see much more of a midpoint 618. I mean, we have seen assets pull back to the 786, but I mean, when that's happening at that point, it already feels worse, right? It doesn't feel like just a midpoint test and then you're going to see more rally. Because this is so massively oversold, dude. I mean, overbought. It's literally 88 on the quarter chart. The last time it did this, you only went to 43. This time you went to 110. So naturally, this is a euphoric style, short squeeze, whatever. I doubt you're going to see any serious higher targets. You would be lucky if you made fresh all-time highs. Lucky. It is possible, but it would be luck. This thing just started and it has been on an absolute tear ever since. But from where it started from, doesn't look good to where it is now. And they're on bad earnings too. Like, not just kind of bad, like bad. Well, this ain't that bad, but it is bad. It's still bad. So I don't know anything about the company. But I mean, fibs are just price targets. That's all they are. You don't even need a fib. You can essentially see where the midpoint of this expansion is just by eyeballing it. So yeah, if you lose $50, I'd be very worried. Then you'll be mad at yourself for not taking profits at 85. So why even allow it to get to that point is my question. Like, why even let that happen? Nobody can see into the future. You've already doubled your money, plus you doubled it plus an additional 20%. Like, that's phenomenal. So you could hypothetically take profits, pay yourself for taking that risk, and then look to add when you get a legit support test and hold, which will most likely happen in the future. It's hard to think that it will, but I'd say most likely you're going to retest the weekly 21 exponential moving average at some point. Probably not any time in the next 5 weeks, but at some point you will most likely retest this 21. That will be when you will be watching for a support test. And if it continues to close weeks above that, then you can add back into it. But, small. Don't want to screw your cost basis up too much. But I mean, there are a million different strategies one can take. Always have some kind of strategy before ever taking any investment. You need to have targets, objectives. If you go talk to a money manager, the first thing he's going to ask you, what are your goals? Any money manager worth his salt, first question after what's your name should be, what are your goals for retirement? And if you tell him, yeah, I'd like to quadruple my money, he's going to laugh in your face. You know what I mean? Because he knows that is not going to happen, most likely. Is there a chance it could happen? Of course. But not if you take a very risk-averse strategy when investing for your future. I mean, you're going to you got to have some kind of goal, some kind of profit projection, target, something when you take investments. All right. But yeah, fibs are just random levels. They're not, they work really good in like Forex and things like that because Forex doesn't really trend, right? Forex kind of stays range bound. It's more of a speculation vehicle. Now, Forex is used, it has a legit use case as it's literally the exchange rates of currencies. But it's levered up and it's speculative in nature. Silver long yearly open support holds, says Janus. I can't even pronounce your last name. I'm not even gonna try. I'll just murder it. Unfortunately, it's potentially possible. Let's go look where the year open is. Not on this chart though. We're gonna look at silver, legit silver, which is XAGUSD. This is like your legit silver. Okay, could you get long here? Or is that why this is support? I would argue, yeah. Yep. It is why price is having a difficult time breaking down. But I mean, is your reason for getting long silver better than my reason for getting short silver? Probably not, right? You just want silver to go up, so you're hoping that it holds here. I would say silver's been testing this level legitimately since April, and it's right back down there in June. So unless silver starts to eventually make higher monthly highs, the breakdown is coming. Now, obviously, I can't predict the future, but I mean, just looking at the trend, let's say just the last 4 weeks or the last 3 weeks, right? From this week, this is a lower high than these weeks over here, right? And then this was a lower high to that, right? Okay. Now, what has it done in the last 3 weeks? Another lower high, another lower high, and another lower high. Generally, that's not bullish. Okay? Now, you can make the argument that it isn't bearish because those lows, this week is an inside week. You haven't made a fresh weekly low yet. So, you could argue that it's wedging up. So, a move is coming. And I could be wrong. If the dollar rolls over, I will be, most likely. But if it doesn't, I probably won't be wrong. I've been doing this a long time. And I'm not trying to be cocky or anything like that. I could absolutely be wrong. But right now, it's expensive to hold dollar shorts. Very expensive. And as we saw today, right? Today was a beautiful example of a short trade that should have worked. In theory, here's your daily range. Literally, right here is your day open. The day opens and immediately weakness ensues. Then you get one spike up to the open, and what happens? It fails. Then you get downside continuation, a fresh lower low. Then you build a sideways range. Consolidation? Nope. It ended up being distribution as you went down and made a lower low. And then you spiked, obviously, off of the low aggressively. Why are you getting these aggressive spikes off the lows? Because it's too expensive to hold this short. You don't have any big money investors shorting this yet because it's too expensive. So price literally can't go lower. It refuses to go lower. Refuses to go lower. And every chance that they've had to literally break this down, it has been bought up. Right back to the highs. Look at all these big sell-offs. Right back to the highs. And this has been the trend on this asset for months and months and months and months and months. Because there is no big money shorting it. It's only retail. Smart money's not going... A, it isn't trending that way, so they're likely going to eat a stop, and then B, just to sit in it, they're going to get charged, I don't know, 15, 20 grand a day, depending on their position size. Who's going to do that? Why would I spend 30 grand a day to short an asset that is going up? Nobody would. But retail, because retail isn't thinking about that. Retail is, I'm getting rich today, so help me, Lord. Yeah. And until we get a cheaper shortable dollar's probably going higher. But I could be wrong. As long as dollar's going higher, then I want to short things that are against the dollar. That's the reason I'm even looking for short trades on this. It's not because of any other reason. You give me a fundamental reason to get long silver, I will. This isn't a fundamental reason. It's a technical reason. Technical reason. Clearly, people are buying the yearly open, as it has been holding for the last several weeks. So that is a massive level of support. Massive level. But it does look like it's probably going to break soon. I mean, since that level was made, you put in one gigantic rip, and then you gave it all back, and then you put in a lower bounce, and then you gave all that back, then you put in a lower high still bounce. You're giving half of that back. It's just a matter of time before you give all of this back, probably. With an expensive dollar. That's the caveat. Caveat is expensive to be short the dollar. All right. Hopefully that helps you. I really do hope it helps you. Hopefully you understand what I'm trying to say and it makes sense. But I mean, I could still be wrong. Looks like the silver short is working. It did work. You should have taken profits on it. More accounts in Forex blow up than in crypto. Yeah, there are so many games that are played in Forex. Bro, I'm going to tell you right now, you better be a damn good money manager if you plan on trading Forex. All right? There are a lot of strategies that do work in FX. And FX is one of the biggest in terms of liquidity markets that are traded every single day. They are fun to trade, and there are edges to be had in it. But if you are not good at managing risk, you can blow an account just as easy as anywhere else. because there are big moves and those moves are levered up. Now you can adjust your leverage, obviously, but most people don't. Most people go in as deep as they can. Blame it on Penny Lane. I don't know who that is. Thank you for the silver short. You're welcome. And Pix Property said, thumbs up. You're welcome, my friend. I do follow multiple leverage Bitcoin traders, scalpers doing almost 100% on their account every month. It can be done. Okay. I'm not going to disagree with that. Now, I would argue that they don't do that every month consistently. There are going to be months where they don't make 100%, obviously. But can you make 100%? I can do that on one single trade every single month. Like, I could pad those stats as well. I could, very simply. Because the trade that I did on silver today alone, I made 40%. So think about what you said. I can potentially... Now, doubling an account is different than doubling a position. But, hey, I mean, if they're showing you proof and it's third-party verified, and then, you know, buy their course, I guess. I don't know what to say, man. I'm not claiming to be the best trader in the world. I'm not trying to be the best trader in the world. I'm trying to help people manage their money a little bit better, or just show them that it is possible, and you don't need to be a rocket scientist to manage your own money and participate in, you know, the markets. That's it. I've not made any promises to anybody about anything. But, I mean, doubling an account every single month, they should be billionaires if it can be done. I mean, because what you're saying is not only insane, but like nobody in the world that I know of has ever done that in perpetuity, like forever. So they're lying to you is what I'm trying to say. You can't double your account every single month, dude, and do it consistently forever. They would be worth trillions of dollars. I mean, doubling, that's huge. But anyways, all right, you guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you guys trade smart. And as always, happy trading, everybody.